Ladies and gentlemen, good day and welcome to Balrampur Chini Mills Limited earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anup Pujari from CDR India. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on Balrampur Chini Mills Q1 FY23 results conference call. We have with us today Mr. Vivek Saraogi, Chairman and Managing Director, and Mr. Pramod Patwari, Chief Financial Officer of the company. We would like to begin the call with brief opening remarks from the management, following which we'll have the forum open for a question and answer session. Before we begin, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation shared with you earlier. I would now like to invite Mr. Saraogi to make his opening remarks.
Yeah, thank you. And good afternoon, everyone, and thank you for joining us on our earnings conference call. I hope you and your families are all keeping safe and in good health. I trust all of you have had the opportunity to go through the results presentation, providing the details of our operational and financial performance. So I will begin the call with an update on the current developments in the sugar industry, followed by our company highlights for the period under review. India's net production in 21-22, sugar season 21-22 is expected to be 35.9 million. This is after considering an ethanol diversion of 3.4 million. As per the early estimates for next year, sugar production is anticipated to be 35.5 million tons on account of higher diversion of 4.5 million. So this 35.5 will be after diversion of 4.5 million. UP is expected to witness an improvement in production even after post-diversion to 10.9 in the coming season against 10.2 in the previous year. In the other key states, Maharashtra, Karnataka, even after post-diversion, production is expected to remain at 13 million and 5.8 respectively. So all I'd like to say is that these are very early estimates. These are the figures and the estimate done in ISMA. Any meaningful estimate on the countrywide level or a more accurate assessment would be available in probably October, November, post the monsoons. On the ethanol front, a total of 446 crore liters of ethanol was contracted during the year, out of which 363 crores came from the sugar industry. This has been a phenomenal game-changing journey from the industry, moving from 1.5% petrol blending or 38 crore liters in 2013-14 to achieving 10.16% blending, equivalent to 446 crore liters as mentioned above. In 22-23, 12% blending is expected to be achieved, accounting for about 545 crore liters of ethanol. The government has been proactively promoting the production of ethanol through its policies and targets to increase blending rate to 20% by 2025. Pramod, when 20% happens in 2025, what is the diversion expected? 6.5, 7? 7. So just to, as we extrapolated figures of percentage and diversion, so 20% diversion could mean about 7 million tons of sugar sacrifice. Given the significant increase in capacity expected over the next few years, we believe industry should be able to meet this challenge of supplying this above quantity. Given the surplus sugar situation over the last few years, along with ethanol diversion, the industry has also been proactively exporting. In the current season, government is considering to notify another 1.2 million tons, which will enable the country's export to go up to 11.2 million tons. This is by far the highest by a mile. Like Pramod, wouldn't it be 50% higher than what was ever achieved? 70 was the highest price.
Last year
So 70, 35, more than 50% higher. This will help moderate the closing stock to 5.8 million, which is very comfortable. And if you've seen yesterday, the government has given a statement in Parliament saying that their objective is to keep sugar inventory at the end of the year at 6 million. So this tells you of the trajectory and the mindset of the government, which people were doubting when there was an export restriction when came up a few months back. Moving to the company's performance, Balrampur has reported a muted quarter as lower sugarcane yields and recovery in the previous season impacted the sugar division, which resulted in raising the cost of production of the sugar which was carried forward on 1st of April. Right, Pramod? Furthermore, fixed overheads could not be absorbed in this quarter due to lower crushing. So if there is a spillage of crushing into this quarter, which we will brief you later on for the next year, the overhead gets absorbed by that crushing. After 2 consecutive years of errant weather in our area, after 2 years, we are seeing a very decent healthy pattern of rainfall, which we hope should be very positive for our coming season. Furthermore, we have done a lot of cane development work at the farmer end, and we are hoping to report an improvement in both availability and recovery for the next year. I am glad to report that we are on track to complete the state-of-the-art distillery facility at Balrampur, which would operate on sugarcane juice to ethanol with grain. This, combined with our expansion at Balrampur, again where we are going to do both BHA and juice, would take our resultant distillation capacity to 1050 KLPD, which will enable us to supply 35 crore liters of ethanol with the cane crushing we have, or which we are targeting. All in all, we are committed to delivering value to our wide range of stakeholders through our integrated model, which is deleveraged as well, and which has enabled us to sustain a solid balance sheet and achieve positive cash flows. We continue to invest prudently and return excess cash to the shareholders from time to time. I now request Pramod to take the call ahead.
Good afternoon, everyone. I hope all of you had the opportunity to go through our result presentation that has been uploaded on the stock exchanges as well as the company's website and shared with you. All the financial and operating performance data have been given. So for the benefit of having a larger portion of time at our disposal for the Q&A session, I will request the moderator to open the forum. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star in 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Lokesh Maru from Nippon India Mutual Fund. Please go ahead.
Hi, am I audible?
Yes, please.
Sure. Thank you. Thank you for giving me this opportunity. Hi, sir. I wanted to, first of all, after going through the annual report, wanted to appreciate the efforts that the company had put in to deliver what we have even after 2 of our units, which is Balrampur and Tulsipur, being underwater, and challenges faced at Guleria unit command area. So I have one question regarding the same episode, which is what is the spillover impact of the current bad crop on the upcoming sugar season? Like, for example, 40% usually is Ratum, right? So will it be fair to assume that recoveries may not really recover to the extent that we have seen last year or last sugar season, let's say?
Okay, yes. So will I answer that? Anything else?
Again, given our inventory position as of 30th June, is it fair to assume that we'll start crushing this time by end of October itself? Like, what's our strategy there to, how do we plan to come back, recoup the loss that we have had in Q1?
Okay, Pramod.
We can answer the second question first.
Both are related to cane.
Yeah. So let Avantika answer all the questions related to
So Avantika, please answer the question relating to cane. And why don't you give a brief overview of the activities and therefore what is expected? Over to you.
Thank you and good afternoon, everybody. Thank you for joining the call. I want to give a brief overview of the current estimate of what we are thinking for the season ahead. Firstly, as said by my father, the weather pattern is completely different this year than it has been in the last 2 years. The cane seems much better this year than we have seen it in a while. It is giving us the feeling of 1920, but we don't want to jump the gun on that. Having said that, we have also got de-risking methods and ways. We have had a historic level planting this year, and we are reporting an area of 324,000 hectares of area under cane for the first time in since we've been established, and this is an 8% increase from the last year itself. So even if we are to be at the yield of last year, we would have an 8% increase in cane for sure. But having said that, if under this area of cane we are to see 1920 yields, we can be 11 crore plus. So our internal targets are at around 10.5, but we can say more after the monsoons are over, of course. Secondly, this time, since the monsoon pattern has been good, May, June it did not rain at all as it has been in the last couple of years. Our ratoon activities have had a really good start. We are expecting ratoon yields to increase healthily. Apart from this, we also got the opportunity to do interculture operations in the existing plant crop and also the ratoon crop, which we never got a chance to do in the last couple of years, along with insect pest and disease control. So this is the period when work can be done, and if it rains in this period, it becomes difficult for us to carry out activities, which we have gotten a chance to do all of it this year. Other than this, the cane has had a chance to increase, for increased tillering, which is number of millable canes increase in each clump. So this also impacts yield in a positive manner. So it's looking like a decent sort of season upcoming. Also, I want to report that our 238 variety we have reduced due to red rot infestation by a good margin. We are down by 20% this year, and we have increased other high-yielding sugar varieties like 118 in our area, which is of a higher recovery. If not, it's definitely of a higher recovery than 238. So we are expecting, a good year ahead. That's all I want to say.
So if I may add, if one is to observe the weather pattern of this year, the weather pattern would remind us of 1920. And the problem we faced was threefold last year. One, as Avantika mentioned, there was constant rainfall in April, May, and June, and at regular intervals, which inhibited the agricultural activities, which led to a much lower ratoon yield also. So ratoon will improve because till now we've got all the ratoon activities which were to be done with suitably enhanced measures like urea application, etc. So that part has already been completed. So that goodness or that positivity of tillering is already entered the cane. Now in June and July and August, we've had very scattered rainfall with sunlight. So till now, ideal conditions. And as Avantika briefed you on the disease and varieties, etc., we feel rather confident of giving a good performance and getting back to our old levels at 1920 was 10.5. So our 1920, we have already crushed 10.5. And we are, as you are aware, expanding Balrampur, and we have done debottlenecking and other units. There was another question on date of start. Yes, we would like to begin a little early from last year, definitely. And therefore, the crushing even in the current balance sheet would be reflective of that, as well as the next balance sheet, because the spillover would be much greater. Right? So I think we've covered the spectrum, a broad spectrum of how the cane looks like in our area.
Sure, sir.
Thank you.
Sir, last question on realizations. Given that crop from China Island are good, India itself is into 40 million tons this year. Do you see like earlier expectation due to diversion, due to bad crop from Brazil, which was built in was for really optimistic and really higher realizations of the order of 38, 40, etc. playing out per kg of sugar. But after a good crop and earlier estimates of good crop, I would say, globally. So, how are you looking at realizations for moving forward for this sugar season?
So basically, the realization looks very positive. So see what the government is doing. Let's understand very clearly. They are saying keep your inventory at 6 million. So that's just a way of saying that just have enough stocks when the all the mills begin for up to December. Thereby indirectly it is saying I am in sync or I am wanting the price levels to be decent. So until you want the price to be positive, you don't do this. You don't come up with additional 12 lakh, which was even beyond my recognition. Because people were getting so edgy, you'll only stop at 100 lakhs. Or 112 lakhs. So the idea and the thinking of the government is very clear. So therefore, our realizations as we get into August are closer to 36. 35, 80, 36 in that region. We are hoping that these realizations continue to be firm for the next couple of months, next 3-4 months, definitely. And then, there's a marginal dip, that seasonal factor. On production next year, this is again a very personal view. We've given you Ismail's estimates. Normally, when plants run late, like Maharashtra did, the ratoon yield is never good. Because if ratoon is harvested in the month of May end, that yield is not good. But today, one is reeling from an estimation which went awry last year, because one was not able to predict how much more Maharashtra can do. So I don't think 35.5 can be crossed. If at all, it may come down, but that's a very personal thing. Thirdly, the excess sugar, Brazil, etc., they do need sugar. Pramod, you'll take the international scenario.
Yeah, global market needs sugar at this point in time, and India is not a supplier at these levels. So in order to fetch a sugar from India, which will be the requirement, global prices has to move up. The day it starts moving up, there will be a little pressure on the domestic market. Domestic market will also start improving.
And it's already good. So even if we get to next year, and let's say one is able to export 7 million only, you're back to 6 million closing stock, which is perfect. Which is just perfect. So even, for example, we in Balrampur, we have converted one of our refineries into being able to sell into London. So we would also be physically exporting refined sugar. The realization of it is absolutely wonderful. So I think we'll come to figure work a little later. Maybe we'll be able to tell you next time. So we are going to export white sugar from our factory of the, London 5 variety at very good prices. So that again will lower the, that's just to give evidence that even during season, prices might not come off a lot. So price trajectory positive, stock trajectory explained, demand trajectory same, about 6 to 7 lakhs higher from last year, and continue in that sort of 2.5-3% growth of demand.
Understood. That is quite encouraging, sir. Thank you so much for taking my questions.
Thank you. We'll move on to the next question. That is from the line of Sanjay Manyal from ICICI Direct. Please go ahead.
Hi, sir. Just have one question on the sugar production, considering the fact that at the gross level we have reached around 40 million ton. So if we really need to reduce our dependency on the longer run, is it possible that a 10 million ton can be diverted to ethanol, considering the fact that 5 million ton probably can be diverted through juice route and rest through B heavy route, and probably we can reduce the 10 million ton through ethanol only, and probably dependency on the export also comes down.
So, okay, it's again a misnomer to assume, and that's again a personal view, but backed with more than 3 decades of business experience. This kind, if one is expecting 400 lakhs to be produced ad infinitum, I don't agree with that prognosis. So with this negative dipole, that if 1 year rain fails in Maharashtra, you'll see it crashing down. So A, this is not such a big fear for lifetime. 2, yes, everybody is expecting ethanol to be diverted. We've given you the trajectory. 10 million does not seem possible right now. As we go ahead, let's say you do 4.5 this year, then you do about 6, then you do about 7. Meanwhile, consumption would gradually grow, and at some point, production would correct. And even in global markets, there's been very dry weather in entire Europe. Wheat is suffering. Yeah. Brazil is suffering. So the global market today wants 6 to 7 million desperately. If let's say just India, next year production collapses and India doesn't export, world market goes to 25 cents straight, because they need Indian sugar. There is a deficit in the globe. So having said that, your answer, 10 million doesn't look possible right now. But yes, gradually we hope you can go to 7 definitely. If grain underperforms, sugar can go up to 8. We can maybe even cross that.
Right, sir. Right, sir. And another thing would be on the grain ethanol front. How the margin really will differ from the grain ethanol, considering the fact that the recently probably the broken rice and all those grain prices have gone up. So has the margins, though I don't, your operations have not started yet, but maybe from the industry perspective, if you can give an answer to that.
Too early. We are, and anyways, out of Balrampur 35 crores, maximum 5 crores is grain. So A, I won't be worried. B, our fuel is ours. They are suffering because of lack of fuel. And C, our area is a belt of, broken rice, maize, everything. And our distillery is such a state of the art, we can digest anything. You give it broken rice, give it maize, give it anything, BAV, CAV, ENA. So this is a multi-feed distillery. So we hope with our area, we should be able to deliver good margin, but let's wait it out. We're just 1 quarter away from giving you a, decent idea.
Sure.
Plus a lot of fixed costs will get covered there. So it's a first experience for us also. So 1 quarter more.
Okay. That's all from my side. Thank you very much.
Thank you. The next question is from the line of Shailesh Kanani from Centrum Broking. Please go ahead.
Good afternoon, sir. Thanks for the opportunity. Sir, first of all, I would like to know about the guidance of ethanol volumes for this year and next year. I think last time we had spoken about 22 odd crores for FY23. So, what is are we sticking to that guidance, or there is some downward revision to that, and for FY24 as well?
Yeah. So, considering the cane, what we are expecting at this point in time, we are expecting our ethanol volume to be in the region of 24 to 25 crores for FY23 and 35 crores in FY24.
So if we are sticking to the guidance given earlier?
Yes. Yeah.
Okay. So that would entail basically 4th quarter huge bump up in the ethanol volumes, if I'm not wrong.
Absolutely. Right. You're perfectly right.
Okay. So just a bookkeeping question. Can you just give me a breakup of ethanol stock of 0.54 mentioned between B and C?
C is hardly there. It could be 95% of that will be B.
Okay.
Sorry to interrupt, sir. Your voice is breaking.
Can't hear.
Yeah. Sorry. Is it audible? Is it better?
Yeah, now.
Yes.
Yeah. Sorry for that. So I was asking on the refined sugar front, when these facilities do come up and they are operational for full season per se, what quantum and what percentage of that would be to our overall facility? Like if we are producing 1 million ton of sugar, what percentage can that contribute refined of that can be refined sugar?
Refined sugar would be in the region of around 45 to 50%.
Now, I think he's asking Pramod the export. Are you asking exportable or domestic?
No, exportable, white sugar. What we had mentioned about white sugar.
Around 10%, 10 to 12%.
10 to 12%. Okay. And sir, one more question on the aged fund. It was just mentioned that we have around 327,000 hectares under our area. That is an 8% jump. Is it, sir? Is my number right?
Correct. 324.
So, 324. So, and the total area in UP would be something in the range of 27 million, something in that range?
Could be 26. I don't have the exact figure right now, but it is in that range.
Okay. So our share broadly would be, say, roughly 12%. And if we are assuming or we are estimating around 10.9 million tons of sugar production, so we should be easily doing 1 million tons, really, even after considering higher diversion. Is that calculation fair enough to you?
Absolutely right. You are bang on target.
You don't need us. You've done all the calculations rather correctly. Good work.
Thanks, sir.
Solid.
Sir, just last question on the growth front. If I can squeeze in one more question. Sir, FY24 onwards, as we were talking about expanding on ethanol side or dairy side, we have also highlighted in our annual report. You can throw more light, anything on that post FY24?
So, Pramod, actually, see, everything is, we are still, sort of evaluating ideas. Anything as and when it comes up would go to the board and then to our shareholders. You would appreciate that, in the interim, there's not much in that update which we can furnish.
Okay, sir. Thanks a lot, sir. Thanks for that, and best of luck.
Anish, while on the subject of this export, our idea this year is to export around 10% of our production, and as of now we have priced in around 30% of that.
And that would be refined, 30% of the total export, right? That would be refined.
Refined.
Okay. And
thanks a lot. Realization is around 38 rupees per kg ex factory.
Yeah. And I think the cost also
38 rupees is what? 38 rupees ex factory, export.
Yeah, and the extra cost for the refining is around 2.5, if I'm not wrong. That is the extra cost?
There is not 1 penny's cost, except the capex which has already got in.
Okay.
It's a capex item. There is no revenue item there.
Okay. Thanks a lot, sir. Thanks a lot for that. Yeah.
Thank you. The next question is on the line of Anupam Goswami from B&K Securities. Please go ahead.
Hi, sir. So my question is on the export front. So you mentioned about the realization 38 per kg. So where do you see, are we on the lower trajectory of the price at this level, or are we at the peak level on this 38?
No, I didn't get your question. I mean, this pricing for the balance would happen based London prices, which have come off from when we priced our sugar. So it all depends on how London behaves.
Okay, sir. And so when we say that, we have increased our new varieties also we have adopted, and the weather pattern also looking stable, where do we see the recovery? Are we going to see a recovery like a 1920 sort of recovery year, or because in this quarter, which is periodically generally a high recovery quarter, we have seen about 135 or 140 basis points of lower recovery. How much?
I'll explain.
Yes.
So last year, our recovery on C basis was 11.47. Right? So we are definitely hoping for a 30 bips improvement there.
Okay. Okay, so thank you. I'll join back in.
Possibly it can go up or down. It's recovery is far more difficult to predict than availability of cane. But we are hoping that it should also understand one thing. In a year where cane is deluged with water or infested with disease, both these will go down together, right? Quantity and recovery. The moment there is a virtuous cycle which is hit and the mother shoot is strong, the malleable cane is good, you will get both yield and recovery together. It is very difficult that one will be good, one will be bad. You understand this for every factory in India. This is the basic thumb rule law.
Right, sir. Right. And so now that we are also looking to export our refined sugar, do we overall increase our production, what used to be an earlier run rate for a year?
So we have expanded Balrampur and our crushing per day will improve.
So basically going forward, we will look at more than 1 million ton of annual production, right?
Definitely. We don't tell you what we are targeting. I mean, the next year's cane, we are hoping it goes to minimum 10% more. That's when our full asset across the board gets utilized wonderfully. All our distillery plants, heavy conversions, Balrampur's crushing, Balrampur juice, Mirzapur juice. When you go to 12 crores, then it will be asset utilized, to the core. And we are hoping that 10.5, 11 this year also, there'll be wonderful asset utilization.
Okay, sir. So my last question, if I can, your FRP was hiked recently. Do we see a possibility in ethanol prices hike, and especially in the cane juice, because that would really give an impetus to reduce the sugar stock and go for more diversion? Do we see that happening?
So first of all, this FRP rise is, and this is a personal view right now, is better for UP, is good for UP, because as you correctly said, both the juice and the heavy price would go up, which is linked to this FRP.
Right.
And we are hoping, as Pramod said in the beginning, that there would be no SAP rise.
So about the juice, do we see a government giving more impetus for the juice, because that was
maybe in a year from now, maybe, but this year will be it will be a little better, but it's too early. The price rise would come by Pramod September beginning.
September, maybe mid-September.
The inclination of the government is extremely positive. Their disposition is matching their pocket and their thinking. So it is merging with the clean climate. It is merging with Prime Minister's Atmanirbhar concept. It is helping millers pay cane price. It is reducing sugar stock. Export of agri commodity, again, we are exporting a lot of sugar. So this is rural energy come export play. So you are helping the rupee dollar for the country. You are improving the climate. You are getting more and more energy, if I may say, security, and you are helping the agri sector. So it seems very good.
Okay, sir. Thank you, sir. I'll join back.
So there was a question on the total cane area in UP. We had checked and it is around 28.5 lakh hectares.
Thank you. The next question is from the line of Trilok from Diamond Asia. Please go ahead.
Yeah, hi, good afternoon. Thanks for the opportunity. Just two questions. From a transfer pricing within distillery segment, do you think that is going to sort of go up further next year? That initial comment will be helpful. And second, just in continuation with the previous participant question on linkage to hike in ethanol prices linkage to FRP. Typically, this happens just before the sugar season begins. Is that understanding correct?
So as far as the transfer pricing goes, currently it is at 10,300 rupees a ton for B heavy molasses, we would review before the start of the season. There is a possibility that it may go up also.
And
what was
could you also just comment on the ENA prices now and how much it increased over the last 3 months?
ENA prices remains fixed. We have a contract in place and it is fixed.
So that is the tax you have to pay the government for that country liquor business.
Sure. Because most of fair enough. Yeah.
And every miller in UP has to pay, so it's okay, I guess.
Okay. Fair.
Look,
Thank
what was the second question?
Second question, is that the hike in ethanol prices typically happens in the month of September, October. That's the usual annual affair, right? You don't
Yes. This one maybe we'll get it in September.
Sure. And so far there is no obviously linkage to prices or in terms of cost of production, but it's just an understanding, right, from the industry as well as what the historical pattern has been.
But if you read the notification, in the preamble part, it is very clearly mentioned that what are the factors which determines the ethanol price.
Sure. Yeah, fair enough. Okay. Thank you, sir. Thank you very much and wish you good luck.
Thank you. The next question is from the line of Ria from Equitas Investments. Please go ahead.
Hello, sir. Thank you for giving me the opportunity. My first question would be for export. So basically, it's reading that we are in a surplus environment for export when it is concerned. So what are your thoughts? Like, why do you think that prices would shoot up in the export market?
Sorry, come again. What you speak at the end?
So basically, in the export market, we are seeing globally there is a surplus of sugar with Brazil also coming back, which is reading, and there is almost balanced amount of production everywhere else, and there is anti-dumping duty for Indian sugar. So what makes you believe that the prices of export would increase, the global prices?
See, international prices depends upon many factors. Taxes and duties on ethanol, Brazilian currency value, overall availability of sugar in different part of the year. So there is a gap in terms of availability of Brazilian sugar for a certain period of time. India has to fill up that gap.
Perfect.
Okay. Could you let me know more about the Brazilian crop?
Our view is that it should be between 32 to 33 million tons.
Yeah, that is more than what we had expected, right? Like we were expecting a deficit in Brazil, but it's more than estimated.
1 million ton here and there doesn't matter. In a year back, Brazil produced around 38.5 million tons.
Okay.
So just to put what Pramod is also saying, I'll just add my comment. Even if we see the European Union, their pricing, their production is terrible. The dryness and the yield, etc., of beet cake should be very bad.
Okay.
So yes, you are right. There would be,
Yeah, continue.
Yeah, so we don't see, if the world wants Indian sugar, which it does, it's not coming at this price. So, because nobody is going to export at this price. So, as you would have seen last year, there were spots of, up and down. That will continue. However, our trajectory and our view is it should remain positive.
So
and even the current rupee-dollar equation is helping exports.
What kind of deficit do we see in international market?
It's very tough to predict it like, apple-to-apple basis.
Okay. Okay, fair enough.
We give you a basic feeling and a basic sense.
Okay, and a second question would relate to the cost of production. I understand that because this quarter we had lesser crushing, so apportionment of fixed cost would be higher. But going forward on an annual basis, what kind of cost of production are we looking at?
So again, the cost of production will be a function of cane availability, recovery, transfer pricing, But whatever assumptions we have at this point in time on the basis of prevailing conditions, we expect cost of production to be in the region of around 33 rupees.
It should come down, Pramod. I mean, that's all we can say today. It can come down definitely over last year.
Okay.
Recently, yeah.
And what about the monsoons currently? Like a few days back, there was deficit of monsoons in the UP area. So does that affect our crop or recovery to any extent?
No, rather we are happy with what has happened. So East UP always gets more rain. So we have got rain and we are getting, sort of 2 inches, 1 inch per day types, very, evenly spread out with bouts of sunshine. So that's extremely good for photosynthesis and growth.
Okay. And just my last question would be, we are looking at 8% acreage for Balrampur, right?
The group.
Yeah, right. In acreage terms, 8%, and production, could you give any guidance? Cane production.
So we just said our hope is that our internal target, not hope, is 10.5. Pramod, we were 888 last year.
888.
So 112 and 162.
115%.
About 15, between 15 and 17% around.
This is the production increase we are expecting.
Yeah, cane production increase. Recovery separate.
Right. This is basically on account of all the debottlenecking activities we are doing, right?
Yeah, this is because of the cane development efforts, the tool management, the weather conditions overall, which Avantika had explained in the beginning.
Okay. Thank you, sir. That's great.
Thank you. The next question is from the line of Nishant Sharma from Edelweiss Wealth Management. Please go ahead.
Thank you for the opportunity. Sir, 2 questions from my side. First, on the distillery segment. Sir, while I understand that the industry is more should be looked at on a yearly basis, but for past some years, we have been witnessing that the margins in the distillery segment have been coming down. And just taking from the comment from previous participants on the transfer pricing of molasses is expected to increase further. Can we expect what kind of a sustainable margin is expected in the distillery segment on a yearly basis?
So if you see slide 28 of our presentation, which reveals the transfer pricing as well as the profitability margin. So if the prices of molasses, transfer price of molasses goes up or goes down, it directly impacts the profitability in the distillery division.
Right. So we can't have any sustainable margins out there or the trajectory for molasses prices, because earlier there has been a sharp increase in the molasses prices, and possibly that could be the precise reason for decline in distillery margins on a Y&Y basis or on a yearly basis. So is there a possibility to see any kind of a sustainable margins, because that is the key growth driver for profitability going forward?
So if the transfer prices are maintained at this level, which is 10,300 rupees per ton, the kind of margin we are having at this point in time can be predictable. Having said, the reason for varying the transfer pricing is it depends upon the quantum of sugar which we sacrifice under B heavy. If we sacrifice more sugar, there needs to be corresponding credit given to the sugar division in the form of higher transfer price of molasses.
Right.
So that is the rationale for annual review or revisit of the transfer price for molasses.
Okay, so then in that case, as we progress and as we see more share of revenue coming from ethanol, we'll have to divert more sugar towards ethanol business. So this current margin of around 30 to 35% would be coming down also on a year-on-year basis?
But how does it matter if we are giving a high value assignment in the distillery segment for the molasses prices? There is a corresponding credit in the sugar division. So at a company level, it will really not matter.
Okay. So the company level EBITDA margin, which is around 14 to 14% on a yearly basis, unlikely to see a jump towards say 17 or 18% over the next 3 years as we see more revenue coming from ethanol. Is that a fair assumption? That then what could be the blended level margins at a company level, if I have to ask it differently?
So normally we don't give this kind of forward-looking statements. In spite of that, we have given enough food of thought for you by giving the estimated cost of production for sugar for the FY23. We have given a guidance on the cane availability as well as the recovery also.
And the pricing. So,
and the sugar price trajectory as well. Ethanol prices, you will see an upward revision in the month of September, as because we have seen the increase in the FRP price.
Sure, sir. Thank
it's obvious, isn't it? With the cane availability increasing, fixed cost will lower. With the recovery increasing, cost of production will go lower. With ethanol pricing increasing, the revenue will go higher. If sugar prices increase, remain firm, the revenue is higher. The net result of all this will result in a EBITDA margin or whatever.
Right.
So you don't need to split it more. It will become very tough.
Okay, sir. Second question on the sugar side. Basically, if I may have to ask, why we have seen a lower yield, sugarcane yield, vis-a-vis the similar players which are present in UP. So they got better recovery, a better yield in terms of sugarcane, and we got lower yield. If you can help me out in understanding this, because we are in the same state and still the sugarcane yield is a little bit different for us and for them.
Yeah, okay. Good, very good question. Balrampur, Tulsipur received 90 inches of rainfall in 2 months, which was not present in the other areas. The drainage conditions are different. The amount of rainfall was different. And therefore, the yields were different. West UP is a totally different trajectory in terms of drainage facility, etc. Entire Chini zone was infested by red rot at the highest level. There are other units of other mills also. So, that's the reason.
Okay, understood, sir. I'll come back.
There was no lack of effort. There was no lack of effort or understanding of business which led to this. It was conditions beyond our control.
So basically, So I wanted to understand this geographical difference only, that this could be the major reason why.
It's a big fallacy to assume UP is one state. UP's population is more than Europe's population put together. And UP's conditions are like a country's condition. So East UP, Central, West, they are very different conditions. So never expect UP to be one.
Okay, sir. Thank you, sir. So I'll come back in queue for further questions. Thank you.
Thank you. The next question is on the line of Tejas Sanavne from Dolat Capital. Please go ahead.
Good afternoon, sir. Thank you for giving me the opportunity. Firstly, on the annual report, you have mentioned that company could explore profitable options within the chemical universe, which could see a bigger sacrifice of sugar. Could you throw some light on what kind of opportunities are we talking about here?
So basically, see, one is exploring things. So there are many things which one is exploring, and as I had requested earlier, it is going to be difficult for me or for anyone to say anything until the exploration is complete. It goes to the board, and then it goes to, after the board, it can only be told to anyone.
Okay. Understood.
Right,
sir.
but we do continue to explore.
Okay. Okay. Secondly, sir, with India achieving a 10% blending rate and now moving forward to a 12% target in next sugar season, how do you see the timeline in terms of the OEMs rolling out E20 or E15 compatible cars? Because as I believe that right now the current cars which are available in the market are E10 compatible, but as we move along with E15, E20 blending rate, how do you see the rollout from the EMs in terms of the timeline? If you can guide us in that.
Yeah, you want to say something? Yeah.
So there is a very serious exploration also going on about a flex fuel kit which will enhance the ethanol blending capacity in in existing vehicles, and this study is coming almost to an end. So hopefully that is for existing vehicles, and the new vehicles I think.
Definitely. So let me tell you firstly, OMCs don't have anything to do with the cars. That's the car manufacturers who have to deal with it. OMC will just blend. Correct?
Correct.
Secondly, all the sort of car manufacturers, there are two types of, what would I say, compatibility. One is material compatibility of the car, one is engine compatibility. So all cars, I think, all vehicles would get onto material compatibility by April next year. Everybody, I think. So there is no problem in accepting 20% from next year onwards only. Meanwhile, everybody is already equipped to take up to 15%, 12 to 15. Okay. So there's going to be no problem. And there's a lot of work going on in hybrid cars, flex fuel cars, like in Brazil, US, Europe. They make all cars are flex fuel cars, which means you can take up to E85. So on that trajectory, one need not be worried at all.
Okay. So my understanding was, since we are seeing an increased focus on electric vehicles by the OEMs, so is it could we believe that the success of the E20 blending would depend on the OEMs coming out with the E20 compatible cars sooner? If there is any delay from the side of OEMs, could it see a lower demand from the OMCs? Is it a fair assumption?
No, there will be no problem. You're already going to be 1st April onwards, 120% material compatible engines. Material compatible.
Okay, understood.
If one looks at 2025, you could actually, if industry is going to supply maybe 26, you can go up to 25% blending.
Okay,
so on your question, there is zero tension in the mind on that agenda.
Okay, understood, sir. That was very helpful, sir. That's it. That's all from my side. Thank you.
Negative tension, negative.
Thank you. The next question is on the line of Rajesh Majumdar from B&K Securities. Please go ahead.
Yeah, good afternoon, sir, and thanks for taking my question. So I had a couple of questions. One is that Niti Aayog has given us a 50-50 kind of ratio of ethanol from molasses versus grain. And out of the 700 crores of liters allotted to molasses, we'll already be at 550 crores or something by the end of this fiscal or this sugar season. So is this ratio is something which is going to change, especially given the fact that the pricing on juice can change with the recent announcement of FRP, and what is the tipping point of that pricing by which we'll see greater diversion into juice? That was my first question.
So, Rajesh, when Niti Aayog came out with their roadmap 2 years back, thought at that point in time was that India's gross level sugar production would be in the region of around 34 million tons. So on that basis, there was some expectation how the pipelines of distillation capacity comprising of traditional CB and juice would be built up. Right? If we continue to see this kind of sugar, which in our mind is very difficult, that country to have a 40 million ton of sugar on a sustainable basis, there is a possibility that we may see further increase in the distillation capacity. But as far as the current distilleries are concerned, which are in the pipeline of being constructed, it is expected that 7 million ton of sugar will get diverted by 2025-26.
This is based on 700 crore liters, and 50-50 ratio, is it?
Sorry?
This is based on 50-50 ratio, that's 7 million tons or additional?
It's not 50.
It's more than 50-50.
Okay. So 2/3, 1/3 kind of thing.
Yes, more. No problem. 2/3.
So for, on this basis, out of 20% milling, maybe 11% will come from molasses route and 9% from grain. If at all grain capacity supplies fully.
Otherwise, sugar could add to that.
Yes.
Right. And what is the tipping point for juice price by which, say, a distillery like yours, a new one coming up, will not be using grain, but rather be using a mixture of B-heavy and juice, which is the best combination for you?
So to get B-heavy and to get juice, you have to get cane. Okay, if whoever gets cane will first do their job with cane. Now, if somebody wants to go in for juice or not, it will depend on how the pricing trajectory is done and how people have capital to allocate to distillation. Things being attractive there, it could move up. That's our assumption. But just let it play out for a bit.
Okay. And my second question is on our return of capital policy which we've been pursuing all the years in terms of dividend payouts or buybacks, or last year we had buybacks in the market. Will we see a similar kind of payouts in the company going forward post the distillery expansion?
So these are corporate announcements which can be
only
disclosed once the...
board deliberates when things play out.
No, I'm just saying as a policy, we've roughly returned about 4% yield kind of on our stock value in terms of either dividends or buyback over the years. So roughly there would be some kind of policy based regarding the payout of capital. So is that historically Balrampur has been known for this? So I'm just wondering if there is a similar policy which will play out in the years to come.
Rajesh, our stated policy is already available on the website.
Right. Okay, thanks.
Thank you. The next question is from the line of Nimis Seth from GT Advisory. Please go ahead.
Yeah, hi, good afternoon, sir. Can you hear me?
Yes.
Yeah, hi. Very disappointing first quarter results, but on the flip side, we are very actually happy to hear the management's efforts and focus on cane management. And hopefully we will have much more availability and more stable supply of cane in the current season and in the seasons to come. Two questions. One is on bagasse. Bagasse is extremely profitable right now. Is it because of of lower cane production in UP, or is there a structural change in the demand for bagasse, which is why we are seeing good pricing? And does it mean that in the coming year, with a bounce in cane in UP, bagasse prices will come down? That's the first question. Hello?
Yes, I've heard you.
Yeah, and the second question is actually on the new swing plant that we will be commissioning. So just a few specific questions. One is, when is that going to be completed by the vendor and handed over to Balrampur for commissioning? And the second question is, this is a swing plant, so you can only use juice or you can only use grain, correct? And can juice be stored beyond the season so that it can be used in the off season? I believe there is a technology to do that. Thank you.
Okay, so, yeah, right. So, bagasse, yes, there is a change in the pricing trajectory. If at all UP is going to sell, I mean, at least we hoping to get 500 rupees a ton higher than last year. So maybe it's the plastic man, maybe it's so many of these grain distilleries coming up demanding paper, upsurge in paper industry. So we are already in process. We like hoping for at least maybe above 500 rupees at a higher realization on the enhanced cane.
Okay.
So that's your first question. And one has a feeling it's going to be a little more structural.
Noted. Okay.
Secondly, understand the distillation plant, grain and sugarcane can't run together, right?
Correct.
As told earlier, we will be commissioning in October sometime, where we'll be running on grain, or maybe we didn't mention. In October, we should be able to start actually supplying ethanol from the grain route. And as and when sugar gains in November, we will be supplying, as we start crushing cane, juice will go to make ethanol.
So does this mean that when you start in October, the plant will be ready by September, so that you can start in October? Is that fair to assume?
Is there any other way if a plant is not ready to start the plant?
No, that's what I'm saying.
No.
Correct. Okay.
Once we are supplying juice, means everything is ready, na?
So understood.
If you're making sugar, can a factory not be ready?
No, that's what. So that means in the September quarter is when your plant will be commissioned. That was my question.
No, commissioning happens only when you supply in the balance sheet, not when you physically make it. You have to physically take goods out.
Okay. So the interest and depreciation relating to the commissioning of the plant will hit us in Q3, basically, onwards.
Yes. That's
actually the angle I was getting at.
That's okay. Right. Yes. So it will come in that quarter, October quarter.
Correct. Okay. Got it. Thank you, sir. Thank you very much and all the best. Yeah. Sorry.
Including the production.
Correct.
Right.
Okay. Thank you so much.
Right.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Thank you very much. So, Pramod, if you would like to say anything.
It has been a pleasure being with all of you today. I hope we have been able to answer all your questions. And if you have any further questions, we would be happy to be of assistance. We hope to have your valuable support on a continuous basis as we move ahead. On behalf of the management, I once again thank you for taking the time to join us on this. Thank you.
Thank you so much.
Thank you. Ladies and gentlemen, on behalf of Balrampur Chini Mills, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.